Bitcoin. The very word evokes a sense of change, of disruption, of a future where money as we know it is transformed. Born in the aftermath of a global financial crisis, Bitcoin emerged as a radical idea, a digital currency free from the control of governments and banks. It promised a world where transactions could flow freely and securely, not subject to censorship or manipulation. But what is Bitcoin really? How does it work, and what makes it so revolutionary? This video aims to demystify Bitcoin, exploring its underlying technology, its unique characteristics, and its potential to reshape the financial landscape. Whether you're a seasoned investor or a curious newcomer, understanding Bitcoin is essential to navigating the future of money. This is not just about a new form of currency. It's about a fundamental shift in how we think about value, trust, and the very nature of transactions. Bitcoin challenges the status quo, offering an alternative to traditional financial systems that have often proven opaque, inefficient, and susceptible to corruption. As we delve into the world of Bitcoin, we'll uncover the principles that make it tick, the challenges it faces, and the opportunities it presents. Prepare to enter a realm where innovation meets finance, where code becomes currency, and where the future of money is being written in lines of encrypted data. At its core, Bitcoin is a digital currency, but unlike the digital money we use every day in our bank accounts, Bitcoin is not issued or controlled by any central authority. Instead, it operates on a decentralized network called a blockchain. Imagine a public ledger distributed across thousands of computers worldwide, where every transaction is recorded and verified. This ledger, the blockchain, is the backbone of Bitcoin, ensuring transparency and security. Each Bitcoin is a unique piece of code generated and maintained through a process called mining. Miners use powerful computers to solve complex mathematical problems, and in return they are rewarded with newly created Bitcoins. This process not only secures the network, but also controls the rate at which new Bitcoins are introduced. The concept of digital scarcity is crucial to understanding Bitcoin's value. Unlike traditional currencies that can be printed at will by central banks, Bitcoin has a fixed supply capped at 21 million coins. This scarcity, combined with growing demand, contributes to Bitcoin's value proposition as a store of value akin to digital gold. Understanding the blockchain and the concept of digital scarcity is fundamental to grasping the essence of Bitcoin. It's a system built on mathematical principles, cryptographic security, and a decentralized network that operates independently of any central control. This unique combination of factors sets Bitcoin apart from traditional financial instruments and fuels its disruptive potential. One of Bitcoin's most revolutionary aspects is its decentralized nature. Unlike traditional currencies controlled by central banks, Bitcoin operates on a distributed network, meaning no single entity has authority over it. This decentralization offers numerous advantages, starting with increased resilience. With no single point of failure, the Bitcoin network is incredibly difficult to shut down or manipulate. Even if some parts of the network go offline, the system continues to function. This resilience contrasts sharply with centralized systems, which are vulnerable to outages, hacks, and government interference. Decentralization also promotes transparency. Every transaction on the Bitcoin blockchain is publicly auditable, fostering accountability, and reducing the risk of fraud. This transparency stands in stark contrast to the often opaque operations of traditional financial institutions. Perhaps the most significant benefit of decentralization is its potential to democratize finance. By eliminating the need for intermediaries like banks, Bitcoin empowers individuals to transact directly with each other, regardless of their location or financial status. This opens up a world of possibilities for financial inclusion, especially in regions underserved by traditional banking systems. Bitcoin's limited supply is a defining feature, setting it apart from traditional currencies prone to inflation. With a hard cap of 21 million coins, Bitcoin operates on a principle of scarcity, much like precious metals like gold. This scarcity is not arbitrary. It's embedded in Bitcoin's code, ensuring that no more than 21 million Bitcoins will ever exist. This limited supply has significant implications for Bitcoin's value proposition, as demand for Bitcoin increases while the supply remains fixed. The basic principles of economics suggest that its value will tend to rise. This makes Bitcoin attractive as a potential store of value, a hedge against inflation, and an alternative to traditional assets. The 21 million limit also plays a crucial role in Bitcoin's monetary policy. Unlike central banks that can manipulate currency supply through measures like quantitative easing, Bitcoin's monetary policy is predetermined and transparent. This predictability contributes to Bitcoin's appeal as a stable and predictable form of money. While some criticize Bitcoin's limited supply as a constraint on its potential for widespread adoption, proponents argue that it's precisely this scarcity that guarantees Bitcoin's long-term value and protects it from the inflationary pressures that plague traditional currencies. This debate highlights the fundamental differences between Bitcoin's approach to monetary policy and the traditional systems we're accustomed to. Section 5. Peer-to-peer, cutting out the middleman. Bitcoin transactions are inherently peer-to-peer, meaning they occur directly between users without the need for intermediaries like banks. This direct interaction is facilitated by the blockchain, which acts as a shared public ledger, recording and verifying every transaction. By cutting out the middleman, Bitcoin offers several advantages. First, peer-to-peer transactions are typically faster and cheaper than traditional methods. Without the need to go through multiple intermediaries, Bitcoin transactions can be processed more efficiently, reducing costs and processing times. This is particularly beneficial for international remittances, where traditional methods can be slow and expensive. Second, peer-to-peer transactions offer greater control and transparency. Users have direct access to their funds and can track their transactions on the blockchain. This transparency eliminates the opacity often associated with traditional financial systems, empowering users with greater control over their money. Finally, peer-to-peer transactions can facilitate financial inclusion. By enabling users to transact directly with each other, Bitcoin removes barriers to entry for those who may lack access to traditional banking services. This opens up opportunities for individuals and businesses in underserved communities to participate in the global economy. The Bitcoin blockchain is designed to be incredibly secure and immutable. Once a transaction is recorded on the blockchain, it cannot be altered or reversed, making Bitcoin highly resistant to fraud and manipulation. This immutability is achieved through cryptographic principles that ensure the integrity of the blockchain. Every transaction is linked to the previous one, forming a chain of blocks that cannot be broken or tampered with. This chain is secured by complex mathematical algorithms that make it virtually impossible to alter past transactions. This feature is crucial for maintaining trust and confidence in the Bitcoin system. Decentralized nature of the blockchain further enhances security. With thousands of computers constantly verifying and updating the blockchain, it becomes extremely difficult for any single entity to gain control or manipulate the system. This distributed security model stands in stark contrast to centralized systems that are vulnerable to single points of failure. Bitcoin's security and immutability are essential for its function as a reliable and trustworthy form of money. These features protect users from fraud, censorship, and manipulation, ensuring that Bitcoin transactions remain secure and tamper-proof. This robustness is a key factor driving Bitcoin's growing adoption as a viable alternative to traditional financial systems. While Bitcoin offers numerous advantages, it's also known for its price volatility. The value of Bitcoin can fluctuate significantly in short periods, making it a risky investment for some. This volatility stems from various factors, including market speculation, regulatory uncertainty, and the relatively nascent stage of the cryptocurrency market. For some, this volatility is a deterrent, highlighting the speculative nature of Bitcoin and raising concerns about its long-term stability. Others view it as an opportunity, capitalizing on price swings to generate profits. Understanding the factors that drive Bitcoin's volatility is crucial for navigating the cryptocurrency market. Despite its volatility, Bitcoin has demonstrated a long-term upward trend in value. As adoption grows and the technology matures, some argue that volatility will decrease, leading to greater stability. However, it's essential to acknowledge that Bitcoin remains a relatively new asset class, and its long-term price trajectory remains uncertain. Navigating Bitcoin's volatility requires careful consideration of risk tolerance, investment goals, and a solid understanding of the underlying technology and market dynamics. While volatility presents challenges, it also underscores the dynamic and evolving nature of the cryptocurrency space, offering both risks and opportunities for investors. While Bitcoin is primarily known as a digital currency, its underlying technology, the blockchain, has far-reaching implications that extend beyond finance. The blockchain's decentralized, transparent, and secure nature makes it suitable for a wide range of applications across various industries. One promising area is supply chain management. The blockchain can track products from origin to destination, ensuring transparency and accountability throughout the supply chain. This can help combat counterfeiting, improve efficiency, and reduce costs. Another potential application is in digital identity management. The blockchain can be used to create secure and verifiable digital identities, reducing fraud and streamlining identity verification processes. This can have implications for voting, healthcare, and other areas where secure identity management is crucial. The blockchain's decentralized nature also makes it suitable for building decentralized applications, dApps. And these applications can operate independently of centralized platforms, offering greater censorship resistance and control to users. This opens up possibilities for innovative new services and platforms that empower individuals and communities. Bitcoin has emerged as a disruptive force in the financial world, challenging traditional notions of money, banking, and value. Its decentralized nature, limited supply, and peer-to-peer transaction capabilities offer a glimpse into a future where financial systems are more transparent, efficient, and accessible. While Bitcoin's journey is still unfolding, its impact is undeniable. It has sparked a global conversation about the future of money, inspired countless innovations, and empowered individuals with greater financial control. Whether Bitcoin becomes the dominant form of money or not, its legacy lies in its transformative potential. Understanding Bitcoin is no longer just about investing. It's about understanding the fundamental shifts underway in how we think about value, trust, and the very fabric of our financial systems. As we navigate the evolving landscape of digital currencies and blockchain technology, Bitcoin stands as a testament to the power of innovation to reshape the world around us. The future of finance is being written, and Bitcoin is undoubtedly playing a significant role in shaping that narrative. Whether it fulfills its promise as a revolutionary form of money remains to be seen. But one thing is certain: Bitcoin has irrevocably altered the financial landscape, paving the way for a future where innovation and decentralization drive the evolution of money.